Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Terrific to have you with us here at ausbiz. So let's check global equity markets. They staged a recovery overnight after 2 days of heavy selling, while comments by Federal Reserve officials eased US recession concerns. The S&P 500 and Nasdaq were boosted by the Magnificent Seven led by Meta and Nvidia, while Apple slid. And Palantir Technologies delivered strong earnings for the second quarter, surpassing its performance targets, sending its shares surging. Shares in Supercomputer jumped 12% in extended trade after forecasting first quarter revenue above analyst estimates, and announced a 10-for-1 stock split following a rally in its shares as investors bet on its role in generative AI. Caterpillar gained after beating analyst estimates for second quarter profit as higher prices on its larger excavators and other equipment countered moderating demand in North America. Uber shares rose sharply after the ride-sharing and food delivery provider beat analyst estimates for second quarter revenue and core profit, helped by steady demand for its services. Airbnb has forecast third quarter revenue below estimates and warned of shorter booking windows, suggesting travellers were waiting until the last minute to book due to economic uncertainty, sending its shares down more than 14% after the bell. And shares in EV maker Rivian fell around 5% in extended trade as it maintained its production forecast for the year, but said it had lost more per electric vehicle delivered than analysts had expected. Well, US central bank policymakers have downplayed weaker than expected jobs data and the risk of recession, but at the same time warned that the Federal Reserve will need to cut rates to avoid such an outcome. San Francisco Fed President Mary Daly saying that many of the latest job report details leave a little more room for confidence that we're slowing but not falling off a cliff, and added that it's extremely important that we not let the jobs market slow so much that it tips itself into downturn. Well, US Treasury yields have bounced back as those recession fears have eased, while safe haven demand for US bonds ebbed as stock markets recovered. 2-year yields rising 3.98% and the 10-year at 3.88%. And the US dollar has recovered some of its recent losses against most major peers, the Japanese yen having steadied around 7-month highs, and the Aussie dollar trading at 65.2 US cents. Meanwhile, in US politics, Kamala Harris has chosen Minnesota Governor Tim Walz as her Democratic Party running mate for the presidential election. Well, let's get across what is moving markets with a focus on Wall Street. Howard Silverblatt joining us from S&P Global. Howard, good to catch up with you again. What a past couple of days it has been for markets. And as we've seen over the past couple of years, the focus very much on the large cap, or the mega cap, if you like, Mag 7 there, responsible for a lot of those moves higher. And so it is when the market moves lower.
It is, and it's taken, this Magnificent Seven has taken it down. It accounted for about 53% of the loss over the last 4 days. And today, as you said, was a gain, at least in the 500, 1.1%. So on the way up, it was doing 53, 55, 56% of the gains. On the way down, it took it about 53. So that's comparable on there. So what goes up definitely comes down at this point in time. The question is, you like it on the way up? How do you go on the way down? The takeaway here is that it's not a reallocation, though. Originally, we were contributing a lot of the losses to people taking some profits and going into the small cap market. And you don't need a lot of money to go into the small cap to make them start moving up. And we saw that. The S&P 600, the Russell, all went up and they went down. But the big caps are definitely the ones. They've done a lot worse since this has started. Okay, whether you want to go back to the July 16th date, which I think you have up on your chart there, or if you want to do just this month, they're down for the last 4 days, an average of 7.5%. That's more than twice what the average issues are. So again, there's profit taking in there, but they have not collapsed. I do want to mention though a company you just mentioned, which was the supercomputer, that it was about $617 stock. It was $1,000 back in June. It is a high flyer. It was 280 something at the beginning of the year, so it's done well. But it beat on sales, missed on earnings at this point, and did a 10 for 1. Yet it's down about $80, about 13% in the aftermarket right now. That board definitely has taken a shot and said, okay, splits are in. We're going to announce one. They did it, even though they know their earnings were not going to meet. And at this point, the street is saying the split does not outweigh the fact that your earnings didn't make the number. And we're seeing, again, that stock down 13% in the aftermarket. So we're going to have to look at that one and the board. And there's a lot of talk after hours about that issue.
Howard, what do you think investors are going to be looking for now, certainly as far as data points are concerned? I mean, seemingly the catalyst for this large sell-off began with, well, the Bank of Japan lifted interest rates, obviously saw the yen move higher, and that carry trade unwound rapidly.
Yeah, that started last week, obviously, when the Japan increased their rates at that point. And they expected to do it again. But a lot of that unwound starting on that Thursday and Friday, and obviously through Monday. We expect that to continue on through this week, even at the 144 rate, which is where the yen is. Again, a lot of money was borrowed at a low rate. They tried to arbitrage it to some degree. It wasn't riskless arbitrage, obviously, and go into the U.S. or somewhere else to make a few points on there. So that came back. So that is a strong headwind on that. That said, that should dissipate over the next couple of days at this point. So investors need to look at the breadth and the inflows coming in. Again, if you're centered within the U.S., the inflows have been good. If they dry up, that'll be a different story at this point in time. So again, the inflows, and then starting next week, the economic data obviously will make the difference on whether or not we get a quarter or a half a point increase. But right now, at this point in time, a lack of strong selling is considered very positive. Today's 1% increase is nice, but that's a rebound. You were down 845. You came back 110 today. You need to see that continue on, or at least that we can hold the level and set a strong base for where we are at this point in time.
So, Howard, is there a sense perhaps that those fears of recession have been overblown? And of course, that has led to calls for the Fed to cut rates by 50 basis points at the next meeting.
Yes, but let me first say that there's a lot of action between now and when the Fed comes in. The PPI, the CPI, and of course that employment report, which started a lot of this. We had, 4 reports where unemployment has gone up, but we're still at only the 4.3 level. So there's good employment there. So there is calls for them to do the 50, but I think the data is going to do their talking. They're not going to play to the market unless we get a liquidity issue. There was some concern and calls that they do something immediately, an inter-meeting office, and get in there and cut it right away. But unless there's a liquidity issue, that's not expected. So the Fed definitely will go by what the data shows. And again, those would be the 3 main items that they're going to be looking at this point in time.
Now, of course, politics remains in focus too. When do you see that, or is it at that point where it's going to actually start moving markets? Now, of course, we've got certainty as far as who's on the ticket for the Democrats.
Yeah, we saw some of that already, not in the last couple of weeks. In February and March, we did see some foreign money coming in, taking positions favoring Trump, not for a sweep, but for Trump. And that was unusual because that's early, back in February, for foreign money to come in. We did see some in the U.S. starting to take action before the Republican nomination, before the assassination. And that was strongly on a Trump move. For the White House, and for some of it had a sweep for the Republicans. Again, the House and the Senate makes a big difference how the makeup is in there. However, since the assassination, since Biden fell out, since the Harris, and this today, obviously, we've seen the VP pick, but we can't tell the difference on there yet. Too much commotion in the market. We've seen that back up. The polls are definitely changing. There's a lot of hype in this. We have to let that go down till after the convention. Trump still appears to have the electoral advantage on here, but we have not seen more money coming in to take position on either side, whether it be based on the White House or the congressional makeup. So that has basically stopped. We would expect it to start up after the Republican convention near the end of August at some point, when we have a better idea of how the Republicans are set up to take them on and how the Democrats are set up. Also, it'll be after the Fed has their vacation meetings back in August there in Wyoming. We're not expecting a lot to be said, but you never know.
You never know, indeed. Much to watch. Howard, thanks so much for joining us from S&P Global.
Thank you.
So to the local market, where we're just a couple of minutes away, of course, from the open. Look, we are expecting a negative start. As you can see, SPI futures off by 0.25%. No real data to go on locally. We do have just a couple of company results. So the market looking for some direction as the Wednesday transpires, and we get right across it at 10 o'clock Eastern when the market opens. Join us for that.